Good evening, friends. Welcome to a very exciting live event of this evening. A big thank you to each and everyone who have joined us to learn management of finances and accounts in startups. I, Vishwamitra Manav, will be the host of today's event. Talking about me, I am a software engineer by profession and a poet by passion. So let me first of all brief you all about Yuvamanthan platform. So it is an initiative taken by Umesh Kushwaha sir for students and young minds to help them in deciding their career goals and to guide them to take proper actions in order to achieve their aims. So the main motive of this platform is to inspire and encourage young and innovative minds, making them realize their true potential. So you can also find various motivational videos on our channel as well. But what we have come across is that that motivation exists only for a particular period of time. So what we have decided is that the goal of Yuva Manthan is to guide the students to become the source of motivation themselves. That is, they are self motivated. So not only there has been a fail in the number of new startups springing up, but also many are shutting their shop. So let me introduce you to our guest, Reddy Jayanth sir, who is here to solve all our doubts on how to overcome this problem. Welcome to this event, sir.
Hi,
We are
hi,
glad
hello.
to have you here.
Yeah, hi, Vishwamitra.
Let me introduce to sir. He is a chartered secretary and a chartered accountant. He is pursuing his third year of PhD in economics at IIM Kochikode, and he has experience in fields such as agriculture economics, behavioral economics, game theory, finance, accounts, and tax consulting. So, the topic of today's discussion is how to manage and finances in startups. So, a small announcement before we start with our discussion. If you are watching this event on desktop, then you will find a chat box option at the hand corner of the screen where you can write your questions or doubts if you have any during this event. And if you are watching this event on your mobile phones, you will find a live chat option at the bottom where you can write your queries and we will answer all your doubts. So, sir, anything you would like to tell to our audience?
First of all, good evening, everyone, and hi, Vishwa, and thanks, Umesh,
Hello.
for this interview. It's really a hot and burning topic, I should say, because a lot of people taking the entrepreneurial way instead of going for conventional jobs. Even one of which even you're doing. Starting your own entrepreneurship, and unfortunately for all these startup people, they are good in the technical stuff and all the exactly the knowledge they need for starting a startup, but unfortunately n- areas like finance, accounts, taxation are alien to many of these practitioners. So there is a lot of there's a lot of enthusiasm, a lot of interest coming up in this area. And in this right moment, I think you have initiated this talk, and I'm glad you did it. Now, over to you, Vishwa.
Okay, thank you, sir. As you already told us that it has been observed that many startups fail despite being highly innovative and well funded.
Yeah,
The biggest reason is financial management, and that's why
definitely.
here we are with this topic.
Yeah.
So let's begin it with the question that what is the difference between finance and accounts?
Okay, so that is an interesting question. Uh, but to be very honest, the terms finance and accounts are so interrelated and they're equally related as well. And I can talk for a whole day about finance and accounts and what's the difference. And there are even two different subjects, finance and accounts. But from the startup perspective, I'll tell you that accounts is as easy or as simple as it's just a book recording. Book recording is accounts. For example, there's some transactions happening in your business every day. You you capture them, you classify them, and you write in books of accounts, and that is called as accounting, as accounts, as simple as that. Whereas by finance, what generally we would be dealing in this talk is how to secure the capital or the funds that you require for a business. So by finance, I'm meaning where and how to get funds, the funds to start the business, that is basically even called as capital. Whereas when I say accounts, I'm referring to the maintenance of records, maintenance of books for for noting down the transactions of the business.
Okay, so as far as what we understood is that a normal like shopkeeper also manages his accounts. Like
Yeah.
they have their separate registers for them for the accounting for noting down all the things related with that.
Yes.
Is it so? Okay.
Yeah, that is true. Yes, it's as simple as that. See, accounts is something, not only a company, even an individual, even you and I, even we maintain accounts. Maybe we don't do it on paper and on books or computers, but even mentally we have accounts. So I know that how much I need to get from many of those people, how many money I have in bank account, at the same time how much I'm expending. So I know all these transactions that are happening in my daily life, and the moment I decide to write them down in a in a chronological fashion, in a systematic order, and I maintain those as books or as as physical records, then that is what is called as accounts. And the art of dealing with all these accounts is nothing but accountancy.
Okay, okay. That's very nicely explained by you. Uh, and finance, if we talk about, it is like managing the funds, whatever we have,
Yes,
right?
yes, how to manage funds, exactly. So, even in finance, one interrelated concept I would tell you is one main thing is where to get the money from is called finance, and where
Okay,
to invest the money, they are called the investing decisions. At the same time, how much money you pay to the people who have given you the money is called dividend decisions. So these are the three
okay,
popular areas. One is financing decisions, one is investment decisions, and one is dividend decisions. So where to get money from is finance. Where to invest money is investing decisions, and how to pay the interest or pay the dividend to the people who give me money. So in these three topics, we will be particularly talking about financing decisions, about how to get money and where to get money from.
okay, okay. That's fine, sir. So, like if we talk about startups,
Huh.
so how the startup can manage the cash inflow in them in their particular startup?
Okay. So basically, okay, and I'm giving a disclaimer even at the beginning of the video itself that basically the answers that I would be giving would be very generic in nature, because the startups would be they can range from service sector to trading sector to manufacturing, or there'll be many things. So I'll be giving generic as possible. If you have any questions later, you can ask me in in the chat box. So the question is how to manage the cash inflows, or generally cash flows in a startup, cash flows, inflows or outflows. So basically, one needs to have a track of the total amounts that comes into business and goes out of business. So accounting wise, we capture those transactions, we record those transactions in a format or with a thing called cash flow statements. So we prepare cash flow statements periodically, say month on month, depends on your requirement. You can prepare cash flow statements to look at what is the cash inflows you're having and cash outflows having. And even in cash flow statements, it's not arbitrarily prepared. Like, you cannot prepare as you wish, and there is a specific procedure, specific rules which tell how to prepare cash flow statements. That is the recording or the accounting aspect of cash flows. Whereas there is another aspect to it, there is another side to it. The another side is recording cash, how to manage these cash flows. So one basic advice would be to have earmark accounts for your spending for the major business purposes. What I mean by this is, for example, you are you have a trading firm, a trading startup, and in that you
Okay,
will be having the major sales would be from the major receipts of the cash, or the major cash inflows would be sales. So basically, what a prudent businessman generally does is He maintains a separate earmarked account for collection of sales receipts. He maintains a separate cash account for major expenses at the factory. A separate account. And when I'm saying account, it's generally bank account.
Okay, okay.
And to okay, let me make this clear. In these days, the amount of physical cash a business has is very very less. Most of the transactions happen via bank accounts. 90 to 95% of the cash balances are generally in bank accounts. So what I'm coming back to the topic, we it's prudent to have separate earmarked bank accounts. One bank account for sales receipts, one bank account for loan repayment, one bank account for major expenses at the factory site, and one for some miscellaneous. So this is not any, it's not, I'm not, there's no hard and fast rule of how many accounts to have or what, but based on the business, one can identify the major inflows or outflows and major activities, and around that we can actually create some bank accounts. There's no compulsory rule like that, but actually in reality, in practice, it has shown that that ensures a greater control over spending, and that ensures a greater fund management. Even once you scale up, it is better to have earmark accounts, and that will help in better account management.
Okay, so that means to manage the cash inflow, we must have separate accounts that will be helpful for good fund management.
Yeah, good fund management, it enables us to do that. Yes.
Yeah. So there is some kind of credit and debit process that is going on
Okay.
in the startups.
Okay.
So can you give us some example, understand us clearly that what exactly is this credit and debit process?
Okay, so credit and debit are two terms that are actually kind of very basic terms for any accountant to understand. It'll genuinely, honestly, I'm saying it'll take a lot of time to exactly make a layman understand what is debit and credit. But at the surface level, I can tell you that okay, okay, at the surface level, you can think of okay, there is again there are two types of uh, things that generally you encounter in accounts. One is balance sheet and one is profit and loss. So we'll be talking about that later, in further in the conversation. But whenever
Okay.
there is there are some transactions related to balance sheet, or whenever there are some transactions related to assets or liabilities, we follow the principle that says debit what comes in, credit what goes out. For
Right.
example, okay, I think it would be better for us to take this question after we finish the balance sheet and discussion about balance sheet or P&L.
Yeah, yeah,
I
sure,
would come
sir.
back to this. I would surely come back to this.
Yeah, yeah. So let's first discuss that what is the balance sheet and how it is important, how much it is
Oh,
important. So
okay.
just tell us that first. Right.
Okay, you're saying, can you please repeat once more? You're saying?
What is the balance sheet?
Okay,
Uh,
okay,
People are
okay,
not knowing that what exactly it is and how much important it is
okay,
to maintain
okay.
that.
So you asked
So
me a very relevant question. So basically, to tell you about balance sheet, I should even mention profit and loss account. So there's something called as profit and loss account, and there is something called as balance sheet. So basically, the statement of accounts, the financial statements of any company, they consist of P&L, balance sheet, and also the cash flow statements that we were discussing earlier. So now what is balance sheet? Balance sheet is nothing but, in layman's term, balance sheet is simply a cumulative record as on a particular date of what all the various assets and liabilities your company has. So for example, so balance sheet is necessarily prepared on a particular date. We say, if you see the heading of balance sheet on any newspaper advertisement, etc., you will see balance sheet as on this date, as on that date. And balance sheet is actually used is actually it actually tells us the financial position of balance sheet tells us the financial position of a company as on a particular date. So
okay,
basically, uh, and at the same time, there is something called as profit and loss account. Profit and loss account tells us the performance of a company for a given period. For example, a company, a startup, you started a startup and it has been 2 years now. So as on the end of 2 years, say 31st March 2019, you're seeing the state of this company as on that date, a cumulative view. If you want to see the financial position, cumulative view of that company, you need to have a look at the balance sheet of the company. What are the assets? What are the liabilities? How much money I have got or how much I have invested? These are all assets. And where all have you taken the money from? Whether it is by a loan or is it by the owner? These are all the liabilities part. So basically, one thing we follow, one common principle is assets is equal to liabilities. Whatever money you're getting is liabilities, that is the total amount. And whatever amount you're investing in, that is assets. Basically, the equation goes as account is equal to, assets is equal to liabilities. But at the same time, profit and loss account is prepared for a given period. So you've seen the balance sheet as on a particular date. That gives me a cumulative view after 2 years. Whereas profit and loss gives me the performance of the company in one single year. And what
Okay.
consists of P&L is nothing but incomes and expenses. So what all the various incomes I get by selling or get by renting property or anything, those are all my incomes. And what are the expense I incur, for example, in buying a raw material, in paying to the labor, in paying to the employees. These are all my expenses. So I'll have my total incomes, I'll have my total expenses, and I'll get the profit or loss. If my income is more
Okay.
than expense, I'll get profit. Otherwise, I'll get loss. So this is profit and loss, which is prepared at the end of any particular period. It can be for 1 month, for 2 months, for 1 year, or anything. So I can have a profit and loss for 1 year, but when I'm preparing a balance sheet, it will necessarily give me a view of the company on a cumulative basis.
So as we talk about cumulative basis, what does
Yeah.
it mean by that, sir?
Okay, what does it mean by that is, for example, you ask me, for example, I'll tell you, okay, you ask me, you come and ask me, Jayant, how are you now? Okay, I'll say
Okay.
I'm fine. You'll ask me how has been your 1 month, this past
Mm-hmm.
1 month in terms of my PhD work. I'll say it is not that great. I'm not able to meet my deadlines. I'm not able to do that well. So this month alone, I'm not doing that well. So that can be seen as a profit and loss. I'm at loss, say, for this 1 month, for instance. At the same
Okay.
time, you will ask me, how is your PhD program as a whole? Then I'll see this 3 years of my program as on this date, how it is. If I see a cumulative view of my 3 years, it has been really good. It has been really productive, and as on now, I have many things going on, and cumulatively, I have a good view. But this 1 month has been not so good. So if you take the
Okay.
same analogy to a company, you find that companies may generally have losses in few years. Their P&L might be showing a negative balance. They might be showing a loss. So 1 year or 1 month or 1 quarter, they might be performing badly. But when it comes to as a whole, from the past 10 years, if you see the cumulative view, you will find that the company is doing very well. So if you want to see the difference of these two views, for the particular temporary view, you look at profit and loss. For the cumulative permanent view, you see the balance sheet.
Okay. And so balance sheet is a different thing, and profit and loss, how can we see the profit and loss? Is
Uh,
there also a separate sheet or anything like that?
yes. In the financial statements of each company, firm, or partnership, or whatever kind of organization, you will have separately known as balance sheet as well as P&L statement. Whereas in
Okay.
case of certain type of organizations, you don't call it profit and loss, you call it income and expenditure. And also balance sheet, you call it as financial statement or position of financial assets and liabilities as on a certain date. Maybe the terminology here and there is same, but again, profit and loss considers and includes things of a temporary nature of a particular period, whereas balance sheet only contains assets and liabilities which are cumulative, which are said on a cumulative basis.
Okay, okay. Fine, sir. So
Yeah.
that means that if someone is running a startup, it's very important to have a balance sheet
Yes.
so that
It
you
is.
may Yeah,
it is not only important, it is compulsory to have a balance sheet. See, because
yeah.
if you're starting with a startup, and what 2 3 months into the startup, if you're not able to, if you're not preparing your balance sheet of profit and loss and your accounts basically on a regular basis, periodical basis, you will basically lose the control of your business. You will not have exact track of how you're performing or where you're going, so you might be kind of lost. So it's always good to have your accounts up to date, and periodically, maybe once in a month or once in a quarter or something, keep them ready so that you can be informed and you can make good decisions.
Okay,
Yeah.
fine, sir. So I think we are clear with this.
Okay.
So now, like, in order to manage accounts for a particular startup, what would you suggest about the structure that should be used to manage the accounts? Is there any
Okay.
specific structure that you would like to suggest to our audience?
Okay. So basically, there's no set rule of how to manage. I mean, how to manage your accounts. I mean, so basically depends on your level of investment, level of capital, and level of even these type of business. So for example, there's startups with great amount of capital, great amount of funding, borrowing, and all. So those people, even before they start, even before they register the company, they'll have to decide on how to go for the accounts and how to do it. Whereas some people without capital might be starting startups, and they might be more engaged in the technical part of this company than the administrative part of the company. So these are also very important. So on a whole, I would say that based on your capital, based on your seriousness, you can hire an accountant. By accountant, I'm not meaning chartered accountant. Chartered accountant is a different person. Accountant is anyone who has knowledge of accounts, basically people who finish their bcom, etc. They are the people who have knowledge of accounts. So I would suggest, I would recommend you to have a person working with you part time or full time, for noting down the transactions on a regular basis. If the transactions are very less, then maybe you can hire even a part time accountant to fill your accounts, books of accounts. But if you, on the other hand, if you feel the business is big, you need to have some more more structure to that. Or if you're, even if you're applying for a loan or you're applying for funding or even patents, it's better to get your accounts prepared by a chartered accountant, or at least prepared by a normal accountant and get verified by a chartered accountant. Now what happens more importantly at the end of year is you need to start paying you need to start paying taxes. So when it comes to taxes, you might most probably need a help of chartered accountant. And so basically, structure wise, I would say there is the chartered accountants initially know a set of books that has to be maintained, set of procedures to be followed. So at the initial
Okay.
stage of your startup, it would be very necessary for you to approach a chartered accountant. And also there are two types of kind of services you can get from chartered accountants when you are setting up a company. So one type is these, I've recently observed these kind of online company registration, companies incorporation firms which are helping setting people companies or startups. They charge a little less, but whereas you have practicing chartered accountants in your vicinity or in your cities nearby, who have been for some years. So my advice to startups is to and these other practicing chartered accountants, they charge little bit more. But I would suggest these startups to approach the second kind of chartered accountants, because they will be with you on a long term basis. They'll help you decide what kind of organization to set up, what are the procedure aspects to take care. They'll be able to help you, advise you on income tax or various taxes related issues, and they'll be on call anytime. Whereas these online services which provide you with the registration of companies, I doubt, once they provide the registration of company or these services, they kind of disappear. So kind of not so advisable if you're in an initial stage of setting up startup, because you'll be needing the advice of a chartered accountant. So better to approach a chartered accountant, or someone of your friends knows, and then better to have a long-term contractual agreement so that you can ask those chartered accountants for any help you need in the long term.
Okay, sir, that's fine. I think Medha from the audience is also asking the same question that, sir, is it necessary to hire an accountant or can startups handle their finances without an accountant? So,
See, okay, we're not talking about chartered accountants. We're talking about accountants as basically. So that's what. There's no rule to hire, an accountant. Anyone having knowledge of basic accounts can actually do, manage accounts. For example, even if you're not a BCom graduate, commerce graduate, and if you still have knowledge of accounts, you can very well do it. And at the end of year, it's better to get it verified by, some accountant or a chartered accountant. Because why this is important is you need to keep your books of accounts clean and without mistakes, because tomorrow you'll be approaching investors, you'll be approaching loan providers, banks and all. So it is better to always better, and it's always better, and also more importantly, you'll be paying your tax based on the accounts you prepare. So to be doubly sure, you can actually, anyone can prepare. To be doubly sure, I would strongly recommend to get them verified by a chartered accountant at the end
okay.
of the year. Yeah.
Okay, so I think your query is answered, Medha. So moving on to our next question, Suraj is asking us that how do we manage the GST and other tax for a startup?
Okay, so that's an interesting and very popular question I come across these days. So, okay, and to answer to the Suraj's questions and also to elaborate, there are two kinds of taxes that broadly startup or any company pays. One is direct taxes and one is indirect taxes. So, direct tax is the income tax that we pay, whereas indirect taxes, one of the major or the most popular one is GST. So now GST,
Okay,
how do we pay, or the process of GST is basically any firm would have to get registered with the GST authority, and there is this online portal which can be useful in paying the challans, paying the GST every month on month without having to visit the office. Now there are many complications in GST. I'll not be talking about all of them, but one important thing I would like to tell is there is something called as composition scheme. uh, this is very important and very relevant for startups. Now what happens in a composition scheme is basically, okay, I'll try to explain it as much as possible. So basically you pay in a non composition scheme, in a usual case of GST payment, you you calculate your tax liability, and then you have something called as input tax credit. And there is some adjustment to be done, and you will have to pay tax after calculation of a certain component. So it is little complicated. Whereas in composition scheme, the payment of GST is quite simple. You just see your turnover, you multiply a percentage given by the act, and you pay that as the liability without any adjustment. So compliance wise and calculation wise, the composition scheme is more simple and more easy to do, but even there are limits up to what turnover you can offer GST scheme, a GST composition scheme. So just have this in mind, people who are watching this video, that there is something called as composition scheme. You can talk to your accountant friends or chartered accountants and know if that is applicable for you, and if it's applicable for you and if it's beneficial for you, you go for composition scheme. Now, coming back to the question of how to pay GST and all, there is a very well laid out, clear, online portal of how to pay GST and all. One needs to remember that there are different deadlines, different dates for payment of GST. For few companies, it might be based on your turnover. It can be monthly, it can be quarterly, or sometimes half yearly. That is also specific to the company or the turnover that you possess right now. And apart from that, so two things that one is to remember when it comes to GSTs. One is the payment of GST on a periodic basis, maybe monthly or quarterly or yearly, and then filing of GST returns also on a periodic basis. So payment of GST is nothing but whatever liability is there, you pay. That is fine, simple. But what is GST return is a statement you have to submit to the GST authorities once in a year maybe, of what all the sales you have done, what all the liabilities you have got, and what all the tax liabilities accumulative you have arrived at, and whatever you have paid. So it is like an explanation of whatever GST transactions happen in a year is GST returns. So two things you need to keep in mind: GST payment monthly or quarterly, and filing GST returns probably yearly. So these are the two things one need to remember when thinking of GST.
Okay, and if we talk about taxes, so if a normal employee working in any organization, he also
Yeah.
needs to pay taxes. He needs to
Yes.
file income tax, ITR, and all.
Yes.
So, can you just tell us something about that?
Okay, so that's a very important, relevant question, I would say. These tax you're talking about is the income tax, a personal income tax paid by every employee, be it salaried or any kind of employee. They all are supposed to pay income tax. Now, what happens in an income tax is basically you need to calculate. Okay, now let us take an example of a salaried person to make the discussion more clear, more simple. So, what
Mhm.
happens with the salaried person is he will have, an amount of salary, cumulatively. At the same time, maybe he might have some interest from bank savings or some interest account in some interest from fixed deposit or something of that sort. At the same time, he might have sold some land, he might have some capital gains, or he might be having some shares. So there is this varied kind of income a person can have. So apart from salary, you can have income from house property, income from selling of any assets, or also you can have income from other sources like shares or etc. Say shares or mutual funds, etc. So now an individual who is salaried needs to identify all these sources of income, and then in the income tax portal there is, if you type in Google income tax e-filing, you get a portal, income tax portal. In that there are few types of 6 to 7 types of ITRs, income tax return, short form is ITR. So for most of the salaried individuals, the ITR that they fill would be ITR 1.
Okay,
So in ITR one, it's a there's an Excel utility as well as Java utility. To use the Java utility, you need to have the Java utility even installed in your system. The instructions are given in income tax website. It's quite easy. So once you use the Java utility of ITR one, you can actually type the details of your salary, of your expenses, of your various other incomes, and the portal will and the utility will automatically calculate your tax liability. and
okay,
and to add to that, there are many other portals and many other user guidelines by income tax department as well, and many other websites which provide some guidance on how to fill ITRs. So ITR 1, to be honest, maybe first time, if someone is filling for the first time, I would recommend them to take help of some of their friends who's a chartered accountant, or who's experienced in income tax filing. But if you do it once or twice under some guidance, from second or third time, it can be done quite easily on your own. Unless there are some extraordinary transactions, most of these ITR one, with the salaried employed salaries, salaried employees fill. It is quite simple, and there are many tutorials in YouTube as well. So just remember, you have to fill ITR one, and for the first or the second time, you can take help of a chartered accountant, and from then on, you can do on your
okay, okay, sir. That's fine. And if we talk about like some students who enter into a new job and they have to pay taxes, so they have to file ITR and all, so they have some question, some confusion related to form 16 also. So
own. Okay.
can you also give us a brief you know knowledge
Yeah,
about form
yeah,
16
I
also?
understand. So basically, when it comes to Form 16 is issued by your employer. So what happens is your employer is supposed to pay you your salary. The same time, he's also supposed to pay tax on your behalf. So what your employer does is, for example, he's supposed to pay you 100 rupees of income in a quarter, say in a quarter ending December ending. Okay, so when he's supposed to give you 100 rupees as your income, and he's supposed to deduct a tax of 10 rupees, so what he does is he pays you 90 rupees and then pays the 10 rupees to the government directly. This he
Okay,
does 4 times in a year in 4 different quarters, and a summary of all these payments is what is captured in Form 16. So Form
okay,
16 is a document given by the employer to the each employee, and employee should actually have a record of Form 16 at the year end when he's actually filing income tax returns. See, Giving Form 16 is an employer's liability, but filling ITRs is solely employee's responsibility. Some companies,
Okay.
even the employer, the company helps the employee to file, but in many companies employees are on their own on how to file income tax. Generally the deadline is July ending July 31st. So basically you keep your Form 16 side by side, and you also be filling your ITR. So in ITR there is something called as taxes paid already, like TDS or advance tax. All these items should be actually tallied with the taxes that was paid as per Form 16. And also,
Okay.
Form 16 also gives you what is the total salary that you are being paid by the employer. That item should also reflect as per your income tax return. So basically what I am saying is, whatever amounts are there in Form 16, make sure they match and they're exactly in accordance with what you have entered in the ITR. That is a basic check. And apart from that, there are a few more entries in ITR, and that's it. So that's how you make use of ITR and Form 16. And one important suggestion is, whenever you see there's a difference between Form 16 and ITR, you need to immediately go ask your employer for any clarification, or if there's any mistake that needs to be rectified immediately, because it is important for you to make sure that Form 16 and ITR are matching. If they're not matching, you should be ready for an explanation that when income tax department asks, you need to be answerable to them.
Okay, so it should match the Form
Yeah,
16 and the
it
ITR
should.
that one
Yes, it
has
should match.
filed. Oh,
It's crucial. It matches.
okay, okay. That's nice, sir.
Okay.
So we have one question from our audience.
Okay.
Suraj's question is over. Now Shubham Deep Gupta is asking us that can we start any startup without any registration initially?
Uh, See, that's a tricky question. Now, you said, can we start a startup? Now, what do we exactly mean by starting a startup is not clear. Now, if you're meaning that just thinking of startup and having a group of friends talk to each other and thinking of an idea and talking to investors and all, this is a basic groundwork that you do before you start a startup. So if you're talking about this groundwork, then no, you need not have any registration or any legal things ready. You can do this anytime. You can keep doing this all the time. But the moment you think of approaching a bank for loan, or even the moment you think of approaching an investor for pitching your idea, and the moment you try to get a trademark patented, you try to get a logo registered, you get to try to get some copyrights, when all these kind of legal complications, legal things comes when you want to create a bank account, that is when you need to actually you need to get registered as a startup, as a company. So I would suggest, if you're serious about starting a startup and you have the idea, you have the people, you have the capital, then it would be very good idea for you to go ahead and register a startup. But if you're in the initial stage of this dilemma, this thinking whether I need to get a startup or not, is it the right path or not, then don't waste money, because frankly saying this, it costs around 50 to 20,000, 20 to 25,000 to set up a firm, to start a to get registered as a startup. So so you must have got the answer. If you're sure, then go ahead and get registered and do all the formalities. If you're still thinking with toying with the idea, you're in dilemma, then better not.
Okay, I think Shubham, your query is answered. Now we have a question from Chandan Teja. He is
Okay.
asking us that how do we tackle talent insufficiency in startups?
Okay. That is an interesting question, Chandan. So this is more okay. So how do we manage talent insufficiency is, see, basically in a startup or in any company for that matter, we need talent from many angles. You need people who are good in technical skills, who do the startup things. You need people who manage accounts, who manage taxes. You need people who know good about finance and where to get money and all. So basically, how to manage talent insufficiency is to hire people for part-time purposes, because basically what's happened, what the most important thing in a startup is the cost control. How you manage your cost, how you reduce your cost. So how do you do that is outsource most of the works. For example, you need not hire an accountant, you need not hire a tax expert. You can always have them on on a subcontract basis or on a contractual basis, And also, for example, you need some expertise in marketing. Yeah, you can always go to a marketing agency. So these kind of diversifying the core activities from the non-core activities is very important to manage the talent insufficiency, and also to and also for cost control. The moment you the people who are in the startup, who are in the roles of startup, are concentrating on the technical aspect of it, or concentrating on the, or concentrating on the important business aspect of it. To concentrate more on that, you need to, have, you need to have, to spend less resources on other things like accounts, taxation. This is all professionals job, so leave it to them. Maybe outsource them, maybe get them on a high, maybe, once in a week, or talk to them once in a, so in that way you can have. And a single one answer for all these is approach a practicing chartered accountant. He would help you in all these other stuff. So that's how you can manage your talent insufficiency. But as the company keeps on growing, as a startup scales up, then you might have to rethink of actually hiring a full-time expert.
Okay, so I think your query is answered, Chandan. Now let's move on to our next question. Suraj is asking us that what are the types of funding for a startup and how to raise those fundings?
Okay, so there are many ways, many ways that you can actually fund a startup. But two broad distinctions I need to tell before even we go into some specifications is the classification of debt as well as equity. So what I mean by that is, Vishwa, when we're talking about the finance of a startup. So basically, where are we getting money from? Are we getting the money from the owners or the people who want to invest, or are we getting money from the lenders or the people who want to just lend? So for example, lenders are the people who are like banks or financial institutions, whereas people who want to invest are, say, some angel fund investors, some other, other, some rich people, venture capitalists and all that. So we need to first basically need to identify if what is the correct mixture of debt and equity that we are going to have in a startup. How much, there are few startups who go for all equity. I mean, equity in the sense only investment, people who come for investment. There are some startups which might even go for fully loan basis. And but ideally, you need to have a mix of debt as well as equity, when you come when it comes to financing of your startup. So once you decided, see, for example, I'll take, out of 10 lakhs you require, in that maybe 5 lakhs you're taking a loan from a bank, and remaining 5
Mhm.
lakh now you're looking for equity, you're looking for investors. You can actually approach venture capitalists, you can actually approach angel investors, and people with reputed, there are a lot of professionals who are looking forward to invest in startups which show promising future, promising cash flows. To manage all these better, you need to have a good plan, you need to be convincing to tell them. And once you figure this out, your plan and all, and how much debt and how much equity, then it's a good, the next step would be to see how to raise capital from. But before that, we need to actually, make sure we have the answers for these questions.
Okay, so that's fine, sir. Now, we have a question from Shubham Deep Gupta. He is
Okay.
asking, his previous question was that do the startups need
Need to
registration?
register or not?
So
Yeah.
now need to register. Yeah. So now he is asking that we need to do registration, but what about having a startup based on freelancing? Does it also need to have a registration? I think Shubham is working as a freelancer with his
Okay.
friends.
Okay.
So,
Okay.
what is your suggestion in that case?
See, Shubham, I understand your dilemma. So basically, to answer you properly, we need to know that there are forms of organization in which you can do a business. Maybe you can do business as an individual, you can do business as a partnership firm, you can do business as a company, and etc. Cooperative society, etc. So when you're doing business as a company, you need to start, you need to register. There's a, there is a ministry which looks over the companies, and there are big procedures and all. Whereas when it comes to freelancing or stuff like that, maybe you're doing on your own, and maybe you're getting money. For that, there is generally there is no need of registering as a startup, unless I cannot exactly comment unless I know the exact model of your business. But for example, okay, for example, say you're writing some articles, or you're helping in literary works or art related works, and then helping some people and giving it to some organizations, and you're getting money out of that. Then only thing you need to remember is you need to pay income tax on that, and there is no need to get registered for that. But if you're doing it with an idea, to get some capital, because freelancing doesn't need capital. But if you need capital, you want to buy some machinery, set up a whole plant, and have an office, and do business in the business sense, business terms, then you need to, yes, register. But if you're doing freelancing of artwork, etc., and you're just you're doing some freelancing work, then I think the most you need to take care of is the income tax, paying the income tax.
Okay. So I think now your query is answered, Shubham. Now, moving on to our next question.
Yeah.
Sir, as we talk about expenses, so
Yeah.
how we can exactly claim our expenses? Uh,
Okay. So when we are talking about, when you're talking about this question, you're talking about from the income tax point of view of how to claim the expenses.
yeah,
Yes. I'm sorry. So basically, there is a section, a provision income tax act, which says whatever expenses are incurred in the course of business to conduct the business, and those are related to business completely, then that can be claimed as deductions while calculating your total income. See, I'll tell you how it works. For example, you have 100 rupees of income and you have 80 rupees of expense. So 100 minus 80 is 20, and on that 20 you need to pay tax. Now, what can go into that 80 is the question, is what you're asking. What all expenses can I claim? What all expenses can I claim as deduction? That
yeah,
expenses,
yeah.
what is the question you're asking? So I would say the straight, simple answer would be whatever expenses you are incurring in relation to business. That is simple. At the same time, as a word of caution, as a word of procedure, I would even alert that you need to have proper documentation, proper supportings for all the amounts to which you are claiming deduction, you're claiming as expense. Because only then, future, if income tax authorities ask, you can actually show them some proof. So that is how you claim. And also a word of caution to many new entrepreneurs who open their companies and start their companies. If you are incurring expenses of any personal nature, it's most recommended to keep it out of books, and not claim it as expense. So it is very important to have a distinction of what are the personal expenses I'm incurring, what are the official expenses I'm incurring. And once you identify that and what all the official expenses are remaining, that only you can claim as your deductions.
Okay, okay,
Yeah.
sir. That was nicely explained by you.
Okay.
So we have a next question from Kirti. She's asking that I am somebody who doesn't have a concrete idea for
Yeah.
starting a business. While I am working on this, in
Okay.
meantime, I want to invest in existing startups. So, any
Okay.
suggestions on this as to where and what to look out for?
Okay, so the two parts to question. One is I'm still thinking of a startup. I'm not sure about that. So, and the other part is I'm even looking to invest in startups. And where do I go for that? Where do I, where do I,
Invest,
invest in startups? So I
yeah,
would say that people who invest generally in startups are these kind of people with heavy fundings, and who are looking out for opportunities, who are looking out for various places in which they can invest and get good returns. So if you're having that amount of capital, then you can actually go looking for you can actually go you can actually go looking for various startups in which are promising, and you can invest. But that is a way that I would not suggest. I would suggest you, on contrary, to actually, uh, there are many people, new age generation. A lot of them are investing in, and a lot of them are starting up. And if you know one of them, and you've actually convinced with any of the stories of your friends with the startup, you can actually go ahead and you can actually go ahead and also invest in the firm. In extreme cases, I have seen one or two cases where actually people didn't have enough capital, they borrowed it from some place and actually have invested in startups. So if you can see the leverage, for example, you're getting loan at, say, loan from bank at personal loan at, say, 15-20%, and if you're expecting that the startup, it will get you a return of around, say, 25-30%. So it's always better to invest in that startup. But the idea, my main suggestion would be to identify if there's any good potential for a startup and then invest them, if you know them personally, or else I would recommend you to stay away, because even you have a plan of starting up your own startup, so better save your capital for your own startup.
So I think Kirti, you must have got your answer that you asked your question. Now we have a question from Ankit. He is asking that what key positions do you need to fill as you scale the business and to get to the next round of capital raise?
Can you repeat the question again?
He is asking what key positions do you need to fill as you scale the business and to
Okay.
get to the next round of capital raise?
Okay, okay. That's a good question, but okay, procedurally, rules wise, there's no requirement as to you have to fill this rules and that rules. But when you are looking for securing, much capital and going for next round of financing from banks, generally the banks expect you to fill in key positions of a person who's expert in the a person or two who are expert of the, in the technical aspects of the business, a person who is expert in the financial accounts and taxation perspective. This is what also they would look for. And also a person who is expert in managing the human resources. So these are the three positions, whatever names you want to call them. It is good to have people at these three positions at least, so that it will be easy for you to convince the lender to give you money. That gives an impression that you're well informed, well prepared, and you have people in places. So yeah, these are the three important things I would suggest you to look at.
Okay, I think Ankit, your query is answered. Now we have a question from Chiru Divya. Yeah, asking that what are tax benefits if we opt for startups India registration?
Okay, so okay, before answering that question, let me tell you that not every company that starts, just with a plan and with basic idea, it cannot be called a startup. So there's a definition given by Government of India as to what constitutes a startup. There is a list of items. So if you just type in India, if you just type in Google the startups in India, you will go to the government website where you will understand what are the conditions. So if you're coming into the definition of that startup, if you're not coming to the definition of startup, then you will not have so many tax benefits. You will be taxed like any other normal company. But if you have, if you're registered, if you're coming under the definition of startups, then you will have a tax exemption of up to 5 years, and there is a fixed percent of how much you'll get as tax benefit. And also, apart from the tax benefit that income tax gives, even GST wise, based on your turnover, if your turnover is less than a set limit, you can even go for schemes like composition scheme. So you have to look out for benefits from income tax point of view, which gives you tax exemption for 5 years in the initial stages. And you must have to also look out for GST related benefits that you're going to get. Again, I'm not elaborating it step by step, because the answer will be generic and it will differ from case to case. But keep in mind that there are income tax benefit as well as GST benefits that you can look out for.
Okay, now Chiru, I think your question is answered. Now, as we are dealing with the topic of managing the accounts, so sir, could you tell us some of the common mistakes that a person must avoid while managing the accounts in startups?
That is a very relevant question, I would say. And there are 3-4 ways in which you can take care of this. I mean, at least the basic idea is that people generally, they they kind of do, they overlook the cost identification of cost aspect. So what I mean by identification of cost is you need to know what are the direct costs, what are the indirect costs, what are the hidden costs, what are the implicit costs. These are all terminology an accountant will understand. So when you know, and okay, for example, what is variable, what is fixed cost? For example, of you're manufacturing a good, and for producing each item you are incurring a raw material of 2 rupees. Now that is variable cost, because as you increase your production, your cost will increase. For each unit you'll incur one extra 2 rupees, 2 rupees. So that is variable cost. At the same
Mhm.
time, there is something called you pay rent for your factory, which is 10,000. So if your production level is 10 units, 0 units, or 100 units, the rent doesn't change. So that is fixed cost. And there's even one more category called semi-fixed costs. So basically, you need to identify what are the costs that vary, that are fixed, and and which are semi-variable and all. So by doing this, you'll actually have a control on how to manage those different kinds of expenses. And apart from that, there is even some the one more area to look out for, to be careful about, is the working capital. Now, working capital is, the definition wise, working capital is current assets minus current liabilities. But what it means is, what are all the what is the capital you require for performing the day-to-day operations is nothing but working capital. The capital you require for day-to-day operations is working capital. Now, you can secure a working capital loan, you can have some cash reserves on your own. Now, where you're getting money for this day-to-day operations is called working capital management. Working capital management is also very important, and you need to take enough care of that. You can initially approach chartered accountants or experts to know how to manage working capital. That is something you need to not you cannot overlook. So first was identification of cost. Second was working capital management, and third is very importantly debt management. Now, debt management basically means how much loans you're getting, and how frequently or periodically are you trying to repay those loans. Because sometimes, for example, you don't repay the loans on time, then you'll have to incur a penalty. And you also make sure that the money you have to get from others, from your from some others, it doesn't it shouldn't become bad debt. Basically, you should not be in a position that you'll not get the money. You should be frequently following up with them. So where you're getting the finance from, and also how you're collecting the funds that you're supposed to get, these all form part of the debt management. So you need to be careful about that also. And also, when it comes to companies which deal in trading goods and all, for them inventory management becomes equally important. So all these stuff, inventory is little bit little bit also, it's more specific to industry. So basically, you need to know how to identify the cost, how to manage your debt, and also how to manage your working capital. And finally, you need to even be very alert about how to manage your income taxes. Because, for example, one simple example is, if you don't file returns on time, if you don't pay taxes on deadlines, then you will have to incur penalty. So initially, all we are looking at in a startup is how to control costs. So if you take care of all these things, then you'll be in a better position to focus on the main business part.
Yeah, so I think these all mistakes should be avoided,
Yes,
and these all things should be taken into consideration so
yes,
that the
yes,
company is not in loss.
yes, yes, that's true.
Uh, so that's fine, sir. Now we have a question from Ravi Teja. He's
Okay.
asking, what do you feel is the criteria to classify a business as a startup? Because a business, even with a turnover of 50 crore in the fifth year, is also taken as a startup. And what is your say on this?
So the question is, what is the criteria for terming a company as a
To
startup?
classify a business as a startup.
Okay. So I'll take the safe option. I'll say whatever as per the Government of India definition of startups. There are some 7 8 points in the website. So whatever comes under those definitions, only them it is safe to call a startup. For example, see, for example, in general parlance, you're buying and selling a good. Maybe you're just trading. You're buying for 10 rupees, you're selling for 12 rupees. As far as I know, that cannot be considered as a startup as per Indian government definition. And but that we think is a startup. For example, you and me, we both come together, we pitch in 10 lakhs and we start a company. We call it a startup, but as per the definition of government, it is not. And to be very honest, you know, unless we're talking about the gains of being called as a startup, income tax wise or GST wise, and I know, unless we're talking about that, in general parlance, you call a business as startup or you call it as a normal company, it doesn't really make a difference. What it might make difference sometimes is to the investors from whom we get the money. If we pitch to them that this is a startup with more innovative ideas, with futuristic kind of thinking, this that kind of startup, there's a chance that you might get better funds. But other than that, there's really there's nearly the only classification, only definition that we generally go back to is the Indian government's definition.
Okay, so basically there is a difference between a business and a startup.
Yes,
Like
exactly.
business is a different thing, and startup can be any kind of startups. It
Every
may be a
startup is in a
social
business.
startup.
Every startup
Yeah,
is in a business. Yeah, yeah, but not every business is startup. Yeah, they can be social startups as well, etc.
yeah, correct, correct.
Yeah.
That's fine, sir. So I think Ravi, your query is answered. Now moving on to our next question from Vijay Verma. He's asking us that do you think it's high time that investor community moves from focusing on turnover to at least EBITDA?
EBI TDA.
Yeah.
Okay. Okay. Turnover to okay. Okay. I'll elaborate the question to the others. So basically, what he's asking is there's something called as turnover. Say you are earning 100 rupees, and EBITDA. So that is the profit you're left with after all the expenses. So for example, your turnover is 100 rupees, and after all the expenses you're deducting, you're getting your profit as 20 rupees. So his question is. Should the investor look at that 100 rupees and think of giving you a giving you a loan or investing in a startup, or should he look at the 20, which is the profitability of the firm? See, to be very honest, turnover is, yeah, like you said, turnover is also one of the most important aspect criteria which investor looks at. But the thing is, turnover alone singularly doesn't really make sense. And I'm thinking, not I've even seen that the trend is now slowly moving towards the profitability. When the investors who are coming forward, they are more interested in the profitability of a business than in the actual turnover of a business. Because to be honest, you and me, both of us know that turnover in isolation doesn't really make sense, and profitability in isolation makes little sense. So these two measures, when taken combinedly, and I would say looking at the profit margin is actually even more important than looking at the turnover, because turnover can be in the most cases scalable. You're getting 1 crore this year, you can obviously get 5 6 crores, 5 10 years down the line. That is there. But at what rate is for profitability changing? What are the factors that affect the profitability? What is there competition? Is there threat from the government or anything? So these are the things we need to consider, and that's the reason why, like you said, I agree with you that profitability is more important measure, and even investor community is slowly moving towards looking at profitability than just turnover.
Okay, so Vijay has one more question that
Yeah.
he is asking that if you were to become FM tomorrow, what is that economic policy you would like to roll out to bring a revolutionary change for encouraging startup space in India?
Um I would not say a single policy which I would like to change, but a couple of things. For example, basically the first thing I would do is I would like to expand the definition of startups to cover more and more business in startups, so that I give more income tax benefits and encourage more people. So I would expand the definition of startup and also provide them with much more income tax benefits. At the same time, to reduce the cost of startups, I would make sure the legal compliances or the tax related or the legal related aspects that are more straight lined for them. I'll make sure that on a single click, without wasting a lot of time, without spending a lot of resources, you can actually simply you can file your returns, you can manage your accounts, finance, taxation, or non-core activities. If I am coming up with a policy for making their lives easier to manage non-core activities, that is what I would do first. Because there are a lot of friends who, a lot of people I know who are starting startups, but almost the amount of time they spend in thinking about the business model they even spend that much time in thinking of accounts and taxation, which is actually not required. It is not their job to worry, not their headache to worry about all these things. So as a fm, if I become fm tomorrow, which is highly improbable, unlikely, I would like to make sure that these procedural aspects of taxes, accounts, etc., are made more simple and compliances are more easy. And number two, I would also expand the definition of startup to encourage more and more entrepreneurs and increase the gdp of that country.
That's really nice.
Yeah.
That's really good. I think Vijay, your query is answered. Now, Suraj is asking us that how to make a financial plan to show the investors. What financial metrics should I concentrate on?
Okay. So basically, there are two things that you need to look out for. One is your cash flows. You need to prepare proper cash flows, and number two is your profitability statement. That is your profitability statement. So when it okay, so first one is cash flows. So when you're preparing your cash flows, and cash flows and profitability statements are the two statements from which we actually derive the try to derive the value of a startup firm. So basically, when it comes to the cash flow statements, you have to make sure, okay, what I'm talking is for both cash flows as profitability statement. You need to, you need to imagine, you need to think, and with all the people in your startup, you need to actually think that what are the revenues that are going to come to me, what are the expenses that I'm going to see, what is the market share, how it's going to increase, what are the price increases. No, uh, will the quantity wise will I increase my sales, or price wise I'll increase my turnover? You have to decide all those things, and also you have to realistically take into account how much expenses you're going to incur, or are they going to increase, etc. So by considering all these, once you're preparing a sensible profitability statement, a sensible cash flow statements, then you are good to go, and that should actually help you, convince your investors or managers.
So I think Suraj, your question is answered. That how you need to make a financial plan and how you need to maintain cash flows and profitability statement. That is very important.
Yeah.
Uh, So, like sir, as we talked about loan for a startup. So,
Yeah.
what do you think? What is your view that if a particular startup gets a loan from bank or anyone, so
Yeah.
what will be the impact and what measures a person should take while taking the loan from banks?
Okay, the response to this question is twofold. So one is debt management and one is tax management. So in debt management, what you need to see is how to take a loan. Basically, you're going to look at what are the various avenues from which I can get loan, which bank has to offer, which financial institution has to offer, what are the different interest rates, and what are the various emis, what is the repayment structure, what is the period of repayment. So all these are clauses of taking a loan that you'll have from each bank. So I would suggest you need that you actually compare them, all of them, from wherever you're getting loans, and then evaluate, and then think, is it really worthwhile to get a loan in first place? You think it's worthwhile to get a loan, and because you're not getting enough funds and all, then you need to see this kind of calculation, and then you need to consider from which bank or which financial service provider to get. That is how your loan will affect. At the same time, you need to even understand that there is a tax implication of loan. When you acquire a loan and you're paying interest on that loan, you can get a tax benefit for that, you can get a tax deduction for that interest part. So basically, you need to even consider that into account and see if the loan is really making sense or not. What many people do is they take loan, and the only cost they see is the interest part. But when you're paying the interest, you're getting some tax benefit. So many people are not considering the tax benefit we get on paying the interest on the loan. So that also we need to consider. So this, if you manage the debt, I mean, if you know how to, if you take care of this debt management part as well as the tax management part, then I think taking a loan would be very, you'll be taking an informed decision while taking a loan, and it would certainly leverage your business. It would be really helpful.
Yeah, so if someone is taking or thinking of taking a loan, so you should keep these measures into mind
Yes, yes,
while
that's true.
before taking a loan.
Yeah,
So,
yeah.
so our next question is from Shubham Deep Gupta. He's asking, what if you don't have capital but you have idea, then how to get funding? How can investors funds for that particular idea?
See, most of the startups, most of the aspiring entrepreneurs or startups might not have capital as much as they require. All they would have is an idea. And on a lighter note, you need to have good presentation skills, make good ppts, and you should know how to talk well to people. But on a serious note, I would say that you need to make a convincing story that you can sell to people, that you can basically make your friends understand, make your parents understand, make your neighbors understand that what you're trying to invest. One is, make them understand of your plan. Number two, make them believe of your success story. See, now whatever startup comes, maybe a record shows that 80 to 90% of startups are a fail. So there'll be this inherent fear of investing in a startup. But to overcome that, you need to make sure you have to sell your story well. And how do you sell your story well? Well, that is a personal trait. That is, that is that's something we can't teach people. But the best you can do is have some realistic ideas, have hope and trust in your idea, and make a good story and try to sell it. And before you sell it to investors, try to sell it to your friends. And sell in the sense, try to present in front of if your friends, of your family, if they find it convincing enough. But if in the first place your friends don't find it convincing enough, then you need to seriously rethink your presentation skills. But if you're thinking it's a convincing plan, then you try finding out investors, and don't be worried. You for sure, at least two or three initial investors will say no, will not have interest. But as you keep your patience, as you keep on working and keep on improving, you I'm sure you will find one of the other investor who will be interested in taking up your idea. So you just need to have some patience and some storytelling skills. That's what.
Okay, so I think Shubham, you got that idea. You need to build a story of your own, and that should be a convincing one to your
That's
friends, to your family, and to whatever investors you are going to talk to.
yes, that's true.
So that's uh, that's the answer to your question, Shubham. Now we have a question from Ravi Teja. He is asking if is required to satisfy the requirements of government definition to be said as a startup unless you get funded by a VC or recognized by a incubation cell. It's not a startup. Are you sure of it?
See, basically, that's why I'm again coming back. So, if you go to some other countries, the definition of startup might change. If you go to, if you're looking at some other point of view, the definition of startup might change. What might be recognized as a startup by an incubation cell might not fit under the definition of a government. And when I was asked this question, I took up the liberty with me, and I said one of the ways in which I would call a firm as a startup is by satisfying this definition. Although there are many other bodies, like you said, incubation cells and VCs, so even they can classify as startup. And what is most important is what is the purpose to which you are basically attending. Are you thinking from the income tax point of view? Then maybe the government definition becomes important. Are you thinking from the investor's point of view? Then maybe VC's definition becomes important. Are you thinking from the, say, incubators point of view? Then incubations definitions become important. Are you thinking of opening a startup in some other country? Then other conditions will matter. So it is highly subjective, and mostly it depends on the purpose which we are trying to serve.
Okay, so it all depends on the what type of startup, as we already discussed
What's the purpose? Yeah,
previously.
that's yeah.
Yeah. Uh, so, so, sir, any best suggestion according to you that you would like to give for the entrepreneurs to manage their finances along with their work?
Oh, you're talking about people who are already employed and who want to start a startup.
Uh, yeah, and how they can manage finances along with they have lots of responsibilities,
I know,
lots of
I
other
understand.
tasks to do.
I understand.
So,
So I would suggest recommend one way in one of my friends who's also managing a startup and doing his job. What he does is basically he works in a 5 day job. At the same time, he's trying to open a startup. So what he has done is he has consulted a expert or a he has consulted a chartered accountant basically who helps him in the finance, taxation, and accounts aspect. Now, what he does is he is in discussion with other players of the startup, and he's working on the branding aspect and talking about the how to get the product out and how to convince the investors. So, what he has basically done, one important good thing he has done is he's basically outsourced all these finance accounts and etc. related stuff to a chartered accountant, and also at the same time he keeps updated himself that what are the implications and which way I need to go. So he's not totally oblivious, he's not totally he's not totally invisible. At the same time, he's also outsourced this thing. So I think this strategy, at least in the initial stage of thing, will help you because you have other responsibilities. At the same time, use your weekends wisely. Spend your weekends on working on your startups and spend your other 5 days on your other job. At the same time, one very important heads up I wish to give to all the working professionals is most of your companies will have employment agreement with you which prohibits you from operating in any other company. For example, if you're working with say some XYZ software company, then you are not supposed to work with any other company, etc. So you need
right,
to
right.
make sure that how what your employment agreement talks about, and also you need to you need to know properly that when you need to exit it. So once you think the idea is working, you're secured funding and things are going good, you can actually take this step, and even though the income is less, you can actually go ahead and you can if you trust in your own story, then when time comes, it's good for you to jump.
Okay, that's fine, sir. Now, I think we are closed with the questions of audience.
Okay, okay.
Anything more you would like to tell to the viewers?
uh, I would basically startups is a kind of what I'm seeing startups recently. It's a kind of exit mechanism for most of the young professionals because someone is not interested in their job, someone thinks it's not his passion, someone thinks he got his calling, etc., etc. So what I would suggest to people in this kind of dilemma is startup is only one of the options. There are many other things you can think of. At the same time, when it comes to startup, one only sees the promises it holds, the greater rewards or greater you believe in the ideas, but you need to also remember that they're equally, or I should to be more honest, there are more number of risks than rewards that can go into a startup. That is proved by the amount of startups that fail. At the same time, I don't discourage you at all. I'm only asking you to be more cautious, more open to ideas, and I'm asking you to not settle down anytime soon. Take some time, toy on the idea. Don't just get an idea and start running and think of startup. Think of ideas, think of it, talk to people, evaluate, re-evaluate, talk to 10 people, talk to 20 people, get their advice. And only then, after a long gestation period, after you convince yourself and your partner with the idea, and if you're secured the funding, and if you see the growth, the three things: you're convinced yourself and your partners of the idea, you're secured the funding, at the same time you got a plan about the future. If you three things, you check these three things, then go ahead, go live your life and start a startup. Or else you need to rethink, you need to spend more time thinking.
Yeah, that's a fantastic explanation, sir. That's really nice. So, I think we are close with the questions. So, at the end, I just want to conclude that if budding entrepreneur paid half as much attention to the financial aspects of their startups as they do in the technological and marketing, the chances of survival, I think, and success also that would be far greater.
That's true. That's true.
So, thank you so much, sir, for helping us with a lot of doubts, lot of queries. And it is really, I think, going to help all the people watching this event to manage the finances of their startups in a better way. And I think the people are clear with, more clear with the tax and ITR things, that they have confusion on most of these topics. So at the end, I would like to thank Yuva Manthan team to organize this event.
Yeah.
For more updates on our upcoming events, please subscribe our YouTube channel Yuva Manthan,
Yeah.
and don't forget to like our Facebook page to stay connected. Do share this video with your friends. You can also watch our previous events on YouTube channel. So stay tuned for our next event. Have a happy weekend all. Thank you.
Bye.
Good night.
Thanks.
Bye.
Good night. Bye.
Okay. Thank you.